Welcome to our continuing coverage of Budget 2017. So now that the announcements have been made and experts have gone through the fine print and all the notes to the speech, what does this budget mean for your personal wealth, your taxes, and really your life as the Aam Aadmi, the armed citizen of India? Well, I have a full panel here. Sanjay Tholia, partner tax at PwC, joins in. Sameer Kanabar, partner at EY. So the tax experts on the panel. And then from the wealth management perspective, we have Feroz Aziz, Deputy CEO of Anand Rathi Private Wealth, and Nitin Jain, CEO Global Asset Management at Edelweiss. Gentlemen, good to have you on the show. So let's get the tax talk out of the way first. And the only good announcement that really came in was that small rejig that we've seen in the 2.5 lakh to 5 lakh slab, where the tax amount has been halved. We did a quick calculation. I think the total saving works out to around 12,800 rupees per individual. But, you know, let's start with you in terms of, were you expecting more, and to what extent does this relief really help?
Yeah, so again, the challenge was, and of course this is what we had expected as well, that the rate will come down to 5% and there won't be any major rejig, because the aim is to expand the tax base. And if that be the aim, then it is only what you could have done with the rates. So obviously the intention is to pass on benefit to the poor, and which is what he has done, and also recoup between 50 lakhs to a crore the same amount. This is pretty much in line with what we had expected to happen, and that's what he has delivered.
There's a huge amount of disappointment. And Sanjay, your sense, so you went in with a huge list, as every year ATC will get expanded, we'll get more tax breaks on NPS investment, perhaps more tax break for investing in debt mutual funds. Nothing's really happened. So how do you rate the budget from a personal tax standpoint?
No, I think it's, if you look at it from an overall perspective, and you don't look at just ATC, if you look at some of the housing benefits which are there, and we'll talk about that later, on an overall basis, I think it's quite neutral. So the interesting thing I was talking to Sameer was that 12,800 benefit goes to everyone, and 50 lakhs to 1 crore, the limit, they will pay additional tax of 10% surcharge.
Yeah.
And the people above 1 crore were anyway paying 15% surcharge. They'll continue to do that, and they also get the benefit of 12,800.
So a lot of the high earners obviously will be a little disappointed today.
Sure.
You want to comment on that, Feroz? Just overall, from a tax standpoint, what was your takeaway?
See, I think personally, I think it was good. From a perspective that it is lesser confusing and does not require action to get the 12,800 rupees. Otherwise, any tax change generally requires action on the SSE's side to get that benefit. And fortunately, this benefit has not been spread across 2-3 instruments. They could have probably increased the limit of NPS marginally, ATC marginally, and then tinkered around. I think it's good to actually have a larger base being impacted with minimal number of changes for one to remember. So from a tax perspective, I am reasonably satisfied.
So Nitin, someone in Mumbai at least can afford a couple of additional dinners and more movies thanks to this roughly under 13,000 freebie that we've got. But your overall sense on the personal tax standpoint?
No, I would agree with most of the experts here, but there are a couple of other things that I would like to highlight. One, I think 96% of the industry, which is a reasonably large sum, their tax rates coming from 30% to 25%, I think is a big move.
Yeah.
And this is in line with what the finance minister had promised. And I see that as a big driver for bringing increasingly a lot of unaccounted for unorganized market into the organized market. I expect further benefits to come, because it's historically you've seen globally, as you bring down the tax rates, your tax base widens. On the personal tax front, I think it's very unfair to expect any significant tax breaks right now, because your total collections are still significantly in deficit of your total expenses. Finally, your budget is a very simple maths. How much you earn and how much you spend. Today you have a 4-5 lakh crore deficit there.
And of course, the finance minister didn't give away the opportunity. He alluded to the simple numbers, as the total tax-paying base on a personal income tax level is so minuscule. But let's expand the conversation also to housing, because we've seen a couple of announcements over there. And again, purely from a viewer standpoint, this 50,000 rent, I mean, those who are living in cities like Delhi and Mumbai and paying rent above 50,000 rupees, there's a concept of a withholding tax, right? And that is going to be levied on the tenant. If I am, paying that amount to my landlord, then how do I compute this tax? And is it going to make life tougher? You want to take that, Sanjay?
Yeah, I think it's quite simple. So The reason this has been brought in is to avoid cash going out of the system. Okay, clearly the way the cash is available now, people may not be able to pay 50,000 cash or in a different format. So the way it works is that if the total rent is 50,000 or more per month, then the payer has to deduct tax at the end of the year. So he has to just deduct tax at the end of the year. So assume it's 6 lakhs, you deduct tax at the end of the year and pay to the government. You don't need to take any tax deduction number, you just have a challan and you pay it. So I think it's quite simple in terms of compliance, and it will actually increase the tax base.
Okay, would you agree, Samir, broadly on this rent bit?
So again, we had concept on immovable property where everybody was required to deduct 1%. So this is pretty much an extension or a logical extension, I would say. But yes, they saw that for a period of time, I think 3 to 4 years, we have seen this how 1%, and they've come out with various clarifications, etc., etc. And they have probably seen that now people are complying and there are not major pains, and hence we can now extend it. So of course, the larger concern is the pain point as to how every time a rent or a tenant will be deducting, and of course they have clarified you don't need TAN, you can do it once in a year, you don't have to do it on a monthly basis. But again, it's going to be a pain for an individual who is staying in a rent, who is sort of come out from a different city, trying to accommodate, adjust here. So those challenges will be there. But yes, as Sanjay rightly mentioned, it is more as an expansion of tax base. Probably this was one of the category which was missing the sort of bus, or revenue was not able to collect revenue, and that's where they want to tap this.
So one more component in your overall tax file if you're renting out, living in a rented house.
But the challenge is, I'm not sure what is the tracking mechanism and whether people will still overcome it, and because how are you going to monitor unless the person landlord who is receiving rent is filing return and there is no corresponding withholding, then only you can sort of track it. Otherwise, the mechanism today is not known how people will escape.
Okay, gentlemen, we need to take a break, but this conversation on housing is going to continue because there are certain changes in the definition of long-term when it comes to immovable property, and there are also changes in the kind of tax benefits you could enjoy if you had a second home and were earning income from that second home. Very important discussion continues after the break.